still a pretty juicy price target, $300, Rick. I mean, we're not that far away from it. It kind of feels like if we go at this pace, we'll be there.
Yeah, and we already had a big move up earlier this week. We had a significant gap up beyond this 262 level. This green dashed line, if you look back here, was the start of a small gap back here. And we broke above it with a huge breakout there, a big green candle, but it was a false breakout. We retreated back within the boundaries of this horizontal now support level that was then a resistance level. So we gapped up here. We're taking a bit of a breather though this week. Now after the initial gap up now, we're still trading near the top of this longer term upward channel starting with our yearly lows near 102. And we're up 170% from that point here. It's always kind of funny when you have a sleepy day in a stock that's seen such strong price activity here.
As all-in Tesla investors, we can say that this company has been absolutely remarkable, and there's so much to look forward to. But on second thought, what if Tesla is actually doing a share buyback here? We're not speculating that Tesla has actually done a share buyback, but think about it. The one-time underperforming stock has now become one of the hottest picks on the stock market. Everyone wants to own Tesla shares, and even those who already have it want even more. We're not even exaggerating here, but the amount of growth that Tesla stock has made in the last few months has been nothing short of incredible. It's difficult to see any stock come even close. Which begs the question, could Tesla have actually brought back its shares? Maybe there's something we don't know. Maybe this growth is just too exceptional to have been fostered by just record delivery numbers and supercharging deals. Just maybe. That's why in today's video we're going to look at the possibility of a share buyback for Tesla, and who knows? A lot may have been going on that we just don't know about. So stay tuned as we uncover the story. Let's get on with it.
Welcome back to Next Gen Investing. Let's talk some Tesla, as is tradition on Next Gen Investing. The stock doing pretty well again today as it pushes back towards $300 a share. What a move. This stock got down to $100. 101.81 was the low in this stock, and it's now $274. What a return in this stock from its lows.
I know, street analysts, I mean, I think one of the highest price targets is around like $350 now. So the street sees further upside for a name that's up 120% on the year. So it's been a really interesting name to watch. We are seeing some specific analyst news today with Citi actually raising its price target to $278 a share from $215, while also keeping actually a neutral rating. So staying a little bit more to the sidelines here. They maintained this more constructive stance on the U.S. automaker stocks as a whole following the recent vehicle density survey, and they actually see GM as having the most compelling second quarter setup. They see a neutral to slightly negative setup for shares into their second quarter report, saying the bear case really argues that for second quarter, a stretched valuation leaves the stock vulnerable going into a quarter that could be impacted by price cuts, with any margin shortfall or even just unimpressive numbers possibly dampening sentiment. And that, I think, is important. When you have shares that have been on a tear like this, you're priced to perfection. There's a lot of expectations riding high into their second quarter print, which is coming up now in the near-term horizon.
When Goldman Sachs downgraded the stock, the firm said the market is now giving Tesla stock more credit for its longer-term opportunities. But if, just like us, you're a solid Tesla fan, then you know that there's a huge chance that Tesla stock will continue on this upward trajectory. So what about the speculations from Morgan Stanley and Goldman Sachs? Well, these are just speculations. These companies have always found a way to undervalue Tesla stock, and we would think twice before taking any of their comments about Tesla or its stock seriously. Hey guys, welcome back to Tesla Tomorrow. Tesla CEO Elon Musk mentioned the possibility of a share buyback. If you recall the words of the Tesla genius, then you'll remember that he said even in 2023 was a bad year for Tesla, then the company could still do a buyback worth $5 to $10 billion. According to him, the board has debated the buyback idea extensively, and it generally agrees that it does make sense to do one, even though they would want to work through the right process to do the buyback. He also added that it's likely that Tesla conducts some major buyback, although this is still pending board review and approval. While there is no proof that Tesla has actually done a share buyback, we do have some reason to believe that it is very likely. Let's take a look at it together. But before we do, if you like this type of content, hit that like button, subscribe, and turn on most notifications to keep up to date on everything going on with Tesla. Tesla executives and its CEO Elon Musk have been under intense pressure from investors and analysts who require them to take action about previous fluctuations in the company's stock price. Remember when the stock was trading close to $100? It was a very rough time for Tesla and its investors, seeing these incredible stocks being undervalued so much. But to our joy and to that of every Tesla bull out there, things have started to be taking a positive turn. We doubt the bears will have anything to say for a long time. Lots of experts have been talking about the possible benefits of a stock buyback for Tesla, and just maybe Tesla could actually consider buying back its shares. Even Elon Musk has remarked that although the market seems to be concentrating on the short term, it is essential to focus on the long term. Knowing the date of a stock buyback can thus be very advantageous for a few reasons. There's a few reasons then why a share buyback is going to be a good idea at this time. First, buybacks can be an indicator of how a company perceives the current market conditions. If a company announces a buyback, it can signal that they believe their stock is undervalued and they are very confident in their future prospects. On the other hand, though, if a company stops or reduces buyback, it can signal that they believe their stock is undervalued and that the market may be in a bubble. Since stock buybacks remove cash from a company's balance sheet and potentially reduce the number of shares outstanding, they can have a wide impact on the key metrics investors use to value a public company. And some analysts believe that this could be a very good way of boosting Tesla's stock price even further. Stock investors like Leo Kogoan have at some point supported the idea of Tesla buying back its shares in times of significant drops in its stock price. If you recall, the billionaire investor said that Tesla could use its free cash flow to fund the buyback. And he also stated that the move shouldn't affect its existing $18 billion in cash reserves. Buybacks can also affect a company's stock price, either positively or negatively. If a company buys back a significant amount of its own shares, it can reduce the number of shares available in the market and increase earnings per share, which can thus lead to higher stock prices. Share buyback can be quite beneficial for companies, just as the opposite could be just as disastrous. This is exactly why Tesla stock fell in the middle of 2022, when Musk started selling Tesla shares. We're hopeful this doesn't have to happen again. But let's say Tesla doesn't even buy back its shares for whatever reason, and we believe that the company already has a solid blueprint for unprecedented success. So let's take a look at its revenue, for instance. Tesla's revenues have largely risen steadily over the past decade, peaking at $24.32 billion in the fourth quarter of last year before dipping slightly to $23.33 billion in the next quarter. The automaker brought in around $81.5 billion in total revenues in 2022, putting it in 50th place on the Fortune 500 list, which ranks US companies by revenue. This automaker also made $20.9 billion in gross profit in 2022, giving us a gross profit margin of 25.6%. Tesla is by no means your average car maker, so we won't be so bullish on this incredible company. If there is any stock you should be buying right now, then it's definitely that of Tesla. Which other stock has experienced such monumental growth over a short period? In case you have any stock in mind, let us know down below in the comments, and we'd love to hear from you. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.